Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 30th, 2025, and we're diving into the latest earnings report from Johnson Controls, a global leader in smart, safe, and sustainable building solutions. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Johnson Controls has just released their fiscal Q3 2025 earnings, and there's a lot to unpack, from their sales growth to their raised guidance for the full year.
Revenue and profitability overview. Let's start with the top line. Johnson Controls reported net sales of $6.1 billion for Q3 2025, which is a 3% increase over the previous year. John, can you elaborate on the factors driving this growth?
Absolutely. The company saw a 6% organic sales growth, which is quite impressive. This was driven by strong performance in their systems and services segment, with a significant backlog increase of 11% year over year. Their adjusted EPS came in at $1.05, reflecting solid profitability despite some challenges.
And what about their net income?
Johnson Controls reported a net income of $618 million from continuing operations, which underscores their ability to maintain profitability while navigating a complex market environment.
Segment performance analysis. John, let's break down the performance across different regions. How did Johnson Controls fare in the Americas, EMEA, and APAC?
In the Americas, sales remained flat at $4 billion, but organic sales grew by 7%, driven by strong demand in applied HVAC and controls. EMEA saw an 8% increase in sales, with a notable 4% organic growth, thanks to robust service growth. APAC also performed well, with a 7% sales increase and a 14% backlog growth, indicating strong future demand.
It seems like their global presence is really paying off.
Indeed, their diversified portfolio and strategic focus on high-growth areas are clearly yielding results.
Cash flow and shareholder returns. Moving on to cash flow and shareholder returns, Johnson Controls reported $787 million in operating cash flow. How does this translate into free cash flow and shareholder returns?
The company generated $693 million in free cash flow, which is a strong indicator of their financial health. They also returned significant value to shareholders, paying $243 million in dividends and repurchasing $310 million worth of shares. This demonstrates their commitment to rewarding shareholders while maintaining a robust cash position.
That's quite impressive. It seems like they're balancing growth and shareholder returns effectively.
Exactly, and this balance is crucial for sustaining long-term investor confidence.
Future outlook and guidance. Looking ahead, Johnson Controls has raised their full-year guidance. What are the key highlights from their outlook?
For Q4, they expect an adjusted EPS of $1.14.7, and for the full year, they've raised their EPS guidance to $3.65 to $3.68. They also anticipate a free cash flow conversion of over 100%, which is a positive sign of their operational efficiency. Organic sales growth is expected to be in the mid-single digits, reflecting their confidence in continued demand.
It sounds like they're optimistic about the future.
Indeed, their strategic initiatives and strong backlog position them well for sustained growth.
Key takeaways. To wrap up, Johnson Controls has delivered a solid performance in Q3 2025, with a 3% increase in sales and an adjusted EPS of $1.05. They've also raised their full-year guidance, reflecting strong future prospects. John, any final thoughts?
Johnson Controls is well-positioned for continued success, thanks to their strategic focus and operational efficiencies. Investors should keep an eye on their execution in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Johnson Controls' performance in the comments below.